Hey, good morning, everybody. Mike Shea. I want to talk about inflation and what I think inflation is going to do and of how it's going to affect the sale of small businesses. So, as we all know, we're in a period of high inflation. Um, since 1970, inflation has been running around 3 to 3.5%. That was 51 years ago, or 52 years ago almost. Um, since 2020 in COVID, inflation's doubled and now sits at around 7.2, 7.5, depending on what you're reading. It's happening for a variety of reasons, and we're not going to get political, but a combination of supply chain, increased the increased supply of money, the pumping of money into the marketplace, unusually low inflation rates that were artificial stimulus to the economy over the last frankly 10 years, and inflation has numerous effects on both operating and selling small businesses. And so often, small business owners, whether you own a pizza parlor or a florist, you ignore these factors and you do so at your own peril. Um, and the reason is that the effects aren't immediate. An interest rate hike by the Fed, which the markets and the stock market, savants sitting behind their desks, kind of hem and haw about, don't really, or well, they do hem and haw immediately, but small businesses don't really freak out immediately. But high inflation is harmful to a business over time. Inflation hurts the purchasing power of a business and of the business customers to buy goods and services. And when goods and services go up, people are squeezed when their economics of their own household don't go up, and subsequently they make choices. Um, Interestingly, when prices go up doing really fast during inflation, but are gradually coming down, it has a negative effect. Anyways, increased cost of goods and services means that the dollar has much less buying power. This in turn is going to increase the expenses associated with running a small business in terms of labor and raw materials. And I'm sure everybody who has a small business is experiencing that right now. Um, According to business.org, there was an article in 2020 that 82% of businesses in 2020, so that was the heat of COVID, had raised their prices between 15 to 20% to counteract inflation. I've seen people kind of do it slowly, and that two schools of thought. You do it all in one fell swoop, or do you nickel and dime people up? But the bottom line is, if your costs go up, your expenses have to go up, or you cut something and reduce or get creative in terms of operational efficiencies. We've already seen price changes on multiple goods. Gas, comes to mind immediately. Coffee and commodities like that come to mind. Product coming out of China or manufactured in China come to mind. Any type of goods that are made in other countries have come up in price, and small businesses' operating costs have gone up. Particularly in labor was the great complaint over the last several years. Interesting to see what the inflation is going to do to the shortage of labor pool. My expectation is that people will have to go out and get second jobs and maybe even third jobs just to get by. And probably we'll hear the pundits in the White House, talking about job numbers, how great they are. Anyways, as business owners are faced to raise these prices to combat the inflation, customers are just not going to be able to afford it. So they're going to drop out at a alarming rate due to the speed at which costs are going up. When you get a combination of increased expenses, it's going to negatively, and lower sales, it's going to drive down your valuation as a business owner. So, I really feel bad somewhat for baby boomers. There was a trend we were talking about with baby boomers back in 2007, 8, that we thought there were going to be a bunch of baby boomers coming to market to sell their businesses. And then, the recession hit, and then, COVID hit, and then the Ukrainian war hit, and now we've got the economic situation we have. So it seems that those business owners never get to a point where they can recover, and they keep having to pour more money back in just to keep their businesses afloat. But the bottom line is, when inflation goes up, your costs are going to go up. When your costs go up, your profit goes down unless you replace that increase with a corresponding increase in gross margin. So what also happens is that the buyer pool drops. The cost of borrowing money goes up. It becomes more expensive to buy a business. Uh, the net effect of that will become that it'll be very, very difficult for banks to lend because when interest rate goes up, the bank's willingness to lend goes down, and the bank's return on investment for lending goes down. So it's going to be a pretty choppy market. Um, I think it's a good time to get out now. I think if you don't, you're going to be sitting in this thing for another 5 to 10 years, um, whatever it is you own. So think long and hard about that. And as a corresponding level, I do think that side gigs will become businesses of choice. I think that we will continue to see people from other countries trying to get into the United States, particularly in Florida. However, I think that that will continue to be a challenge due to the policies of the various administrations. Currently, we're looking at a year backlog in immigration approvals, and certain political groups are put ahead of the line than those buying businesses. That's just the reality of the data that I'm seeing. So the bottom line is when with this inflationary situation, I think things are going to get super, super choppy. I think the bigger deals are going to struggle to get done. And those that will get done will be private equity level deals. Um, so, that comes with some challenges. They know they're going to hold the high ground in negotiations. Um, you're not going to have as many individual buyers trying to buy businesses because of the cost of capital and the willingness of banks to lend. So the number of buyers available to buy, $1 million EBITDA, $1.5 million EBITDA businesses is going to be lower. So it's super important when you go to market that you get the best exposure and get as much competition on your deal. If you're only shopping for one, that's not going to end well for me from a negotiation standpoint. So if you want to talk specific to your case, I can be reached at 321-287-0349 or email me at mike@tworld.com. Thanks.